Hey everybody, it's Hans here, former pro options market maker and options income fund manager. I manage 10 options income funds plus 2 downside black swan protect funds. Almost 30 years of in the trenches trading with $1 billion in option strategies managed. So whether you're new to options or looking to trade like a pro, I'm here to show you how the professionals do it with precision, with structure, with real, repeatable, and above all, smart income. Welcome. Just a reminder, everyone, of the disclaimer. So that anything we talk about today is for educational, entertainment, and information purposes only. Here's one of my accounts. I'm going to show you how I'm going to grow this account to $5 million over the next 5 years. So join me for this journey. It's going to be tons of fun. We're going to use all kinds of sensible strategies, a lot of income type strategies, some long option strategies, which I'm excited to tell you about. It's going to be fantastic. So let's get on with today's video. Now, one thing that often gets overlooked when it comes to crypto is that it doesn't throw off any income. So for many investors, this is sort of a non-starter. If it doesn't give me a dividend, it doesn't give me some sort of income stream, I'm not interested in it. I'm going to show you a solution for that. So investors, for the most part, are generally okay with this, right? They're not really in it for the dividend or the income. Hey everyone, if you haven't subscribed to the channel, please do, and be sure to download my free options cash flow blueprint, a step-by-step guide for how to go from complete beginner to options ninja. Now back to the video. And in that sense, it's very similar to gold. Both are considered kind of store of value assets. They can appreciate over time. They can serve as a hedge in certain macro environments. We've seen lately that Bitcoin has been a little bit more risk on, risk off, a little bit more resilient, but a little more risk on, risk off in the last couple of years, acting a little bit like levered stocks, levered QQQ. Now, here's the part that we're going to focus in on. Neither one pays a dividend, right? Gold doesn't pay a dividend. Bitcoin doesn't pay a dividend. Neither distributes any kind of interest. So if you're simply holding Bitcoin or something like IBIT, right? So I'm going to show you the IBIT product right here. This is the largest Bitcoin ETF out there. We see iShares Bitcoin Trust ETF with a lot of assets in it, $50 billion in assets. Very, very big average volume. So 10 times the volume of the next best product. So this is important. When you're picking income products, you want good liquidity in the underlying. Usually that translates into better liquidity in the options. And they listed options on the IBIT a few months ago, and they already trade in a very, very healthy and liquid way. So that's an important consideration when you're looking for, to avoid things like slippage, right? You don't want to have these big wide spreads that you can drive a truck through when you're trying to buy and sell, because that's going to cost you a lot of money over time. You do 50, 100 trades over a year's time, that spread is going to really cost you money if you're hitting the bid and taking out the offer. So now, this is where I see opportunity. So I ran a gold options income fund for a decade. I'm bringing a similar approach to this because these products actually kind of share similar volatility and options pricing characteristics in many ways. So no real surprise there. They're kind of both sorts of ideas with explosive upside potential, hedging against, Armageddon and things like that. So the way that we're going to address this is we're going to say, well, what if you could own Bitcoin, but structure it like a cash machine? So cash machine is a trade that I use in the community, that I teach to people, that is basically a way that you can kind of generate some income, have a little bit of an extra hedge in many cases. So, and that's going to really speak to people, I think, these days with markets in sort of turmoil. So what if you can use options to generate that kind of extra income on top of your position, right? So that's a very interesting thing. In my gold fund, that was very compelling to people who didn't really want to own gold because it didn't really deliver any kind of yield. Now we can turn that instrument into a kind of yielding instrument, and that changes everything for many people. And that's the kind of edge that I look for and try to find each and every day in all my strategies. In that recent video I did recently, I broke down how I'm using those strategies around IBIT to potentially turn a non-yielding asset into that income streaming asset. So this is going to be the follow-up video, and I'm going to show you how I made some money on that one. We banked some money, and now I'm aiming for even a little bit more money in this particular trade. So over the next few months, we're going to be really targeting something That looks pretty good. So it's on 2,000 shares of IBIT. What I did was I sold 20 contracts. I collected 8,400 bucks. And now, a couple of almost maybe 6 weeks to 7 weeks later, with Bitcoin at 5340, I'm selling another 20 contracts. Now, what I want you to realize here is that in the game of income trading, it is about many different things, right? So week one of all my programs, my mentoring, et cetera, we talk about fundamentals. We talk about the concepts behind options trading for income because it's very, very important. There was an article somebody wrote a few years ago about, well, who needs dividend stocks? You can just do covered calls on Square. And Square proceeded over the next couple of years to lose about 80% of its value. So that is not the right kind of instrument. You do not want to really own things that are at a 400 PE. Now, for a small sleeve of your portfolio, you can have some more speculative things, right? So I've got things in there, things like Hood that I really love. It's one of my favorite stocks, but it's not what I would put in the same category as a very well-established cash flow kind of company, generating company like an Amazon or something like that, right? So I think there's always room for a certain amount of companies like that. But the core of your strategy should really have these large, resilient, cash flow producing companies, great return on invested capital, all these other metrics that I talk about. So we're always looking for edge, and that edge can come from the fundamentals, as I'm sort of alluding to. It can come from technicals, absolutely, on the chart. How's it looking? Whatever indicators you might be using for that. Volatility edge, right? So that edge can come from volatility itself. What do I mean by that? It can come from the pricing in the option. It can come from skew. Are the puts more expensive than the calls? How do they relate to each other? The implied volatility. Is it high? Is it low? Is it high relative to underlying movement? Remember, volatility is a relative value product. So is it high or low? Sometimes a VIX 14 is expensive. Sometimes a VIX 25 is cheap. Volatility direction. And then one of the ways that you guys can watch volatility is just looking at the ATR, right? Look at your average true range. Recently, we've had an average true range that was just about as large as we've seen since the global financial crisis. So that's going to give you an idea of how much fear, how much volatility is out there, and it's going to inform whether you approach an income trade or not, or how you approach it. And then we're going to look at risk gauges, right? We want to look at VIX term structure. We want to look at the VIX. We want to look at all these things that can give us an idea of how durable fear is, because the last thing we want to do with income trades is to just run into a burning house and do a trade, right? You don't want to sell house insurance on the west coast of Florida as a hurricane is approaching and is like 100 miles away from you. It's coming right towards you. So you have to be very, very careful when you see problems brewing and adjust your strategy accordingly. So let's talk about this strategy right here. We originally, I'm going to talk about this. So back on March 5th, I put this out in the community. Everybody gets the trades. We do all kinds of trades all the time. So we bought IBIT at 50.60, a couple thousand shares, sold those April 50 calls at 420. So what that means is we're selling something that's a little bit in the money. Okay, so that's often part of the cash machine strategy, and even to a much more extreme level than this. This is actually more kind of like selling an at the money call, right? So you're selling something you're buying the stock at 50.60, selling that 50 call for 40.20, which basically means you're getting $3.60 of time value. So remember, time value is that piece of an options price that is going to erode. It is also subject to movement in overall volatility, right? That intrinsic value, which is set in stone, which is basically the difference between the call strike price and the stock price when it's in the money. That's your intrinsic value. That is not affected by anything except the movement in the underlying. Your time value has the ability to move around. And so but also, and what we're interested in as we try to harvest option premiums is we're trying to take advantage of the fact that time value erodes over time. That is the beauty of options income trading, is that we are trading an eroding asset. So we get 360 of protection, and I'm going to show you what the stock did after March 5th. So I want to show you one of the pieces of those layers of edge that I really want to focus on. We talked about volatility edge. So let's take a look at the implied volatility. So this is option pricing on IBIT. We can see that in the gold here, and we can see the underlying historical volatility. So historical volatility is like realized volatility. It's just basically how much is IBIT moving. And we can see that it is moving at a lower rate than the option pricing is pricing in, right? The options are priced generally a little bit high on this particular product. People tend to be paying up for volatility. So, what we can see on March 5th, which is right here, is that the implied volatility is quite a bit higher than the realized volatility. We call that a very positive volatility risk premium. So I saw that the stock was kind of not doing a whole lot, just kind of sort of hanging around, not really. It's succumbed to, some of the selling. So we can see around March 5th, which is when I looked at this, I saw that the implied volatility, the option pricing was quite richly priced. So we see it quite high versus the underlying movement. That represents a very positive carry, as we call it. It's a carry volatility risk premium. Options are priced too high relative to the underlying movement. It didn't look like a whole lot was really going on in Bitcoin at that time. So I said, well, this is kind of perfect for an income trade. I've got this thing that isn't acting particularly well. So let's sell those options. So I showed you what I did. I went in there, I sold those calls, and I used volatility edge and relative stability in the underlying as my sort of layers of edge that I want to look at. So we can see again, if we go back to um, our slide here, that was really the kind of edge that I was looking for. Now, come April, a little bit of luck here. We had IBIT close well out of the money, right? So they were 50 strike calls. We closed it around 48 and a half. And I said, thank you very much. I'm gonna take that money, basically $8,400 in my pocket on 2,000 shares. And I said, okay, well, now let's reassess. So it's important to not just simply go out and do the same thing over and over and over again. And that's what I teach in the programs is really how to read the environment and we don't know what's going to happen necessarily, but we want to read it as well as we can. We want to make a really good educated guess based on all the metrics that we're looking at. And when I'm not getting edge, I don't want to necessarily sell options, right? So if I look at the edge at this particular juncture, I go back to my volatility charts, and here we are on April 21st, and there is no volatility risk premium anymore, right? So the premium is gone. I'm now not getting very much premium for that particular call sale. And remember, when we sell calls, we sell puts, we're always kind of betting that we're not really going to get a massive amount of movement, but at the very least, we'd like a high volatility risk premium to perhaps make up for the possibility that that could happen, that there could be a bunch of movement. So if I'm not getting volatility edge, I'm not very excited. I have to look elsewhere for that edge. And where I'm going to look is in the technicals, right? So I still like Bitcoin. I see that it's starting to break out. Okay, so this is what starts to happen on IBIT. It's starting to break through this line here. It pauses, pulls back just a tiny bit, and then goes gap, 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 and it's above 50. And I put out a note the other day. I said right here, these expired. We have the opposite picture. Realized volatility is actually higher than implied volatility. You can see that right here. The blue line is above the gold line. It's higher. The edge isn't there anymore. I don't want to sell negative edge. Doesn't make sense to me. I would rather just let the stock kind of do its thing and do the work for me, as opposed to using options to generate a kind of income for me from that volatility edge. So I said Bitcoin breaking out a little bit, starting to look really good on the chart. I'm not getting very much edge. Am I going to sell those calls? Absolutely not. So I waited a couple days, and today I started to get a little bit of that edge. We had the jump, 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 and we're back to this line here where we we broke down. It started to act as resistance. This represents an interesting spot for me. There's no guarantee it's not going to go above that, but I said, this is a spot where I'm going to get in here. I'm going to sell these calls. I'm going to get some decent premium for them. I went at the money, right? I didn't want to go too far out of the money because I felt like this was sort of a technical spot where I could get a little bit aggressive on something that I've been doing well on up to this point. So I sold out these June 54s for 435 with the stock around 53.50, 53.40. The volatility edge is so-so, but the market had rallied really, really nicely, and 53 was really that spot that I was looking at, right? So my edge now is on the chart and not so much in the volatility, but that's okay. I need some edge. If I have no volatility edge and I have no chart edge, I have no technicals edge, maybe I don't have any fundamentals edge. In addition to that, risk gauges are still very, very nervous out there. So there's no question that Bitcoin can just absolutely turn around and drop again because there's still very embedded fear out there. You can see it in the VIX futures curve. You can see it in rates volatility. You can see it in the dollar that's not rallying. There's all kinds of stuff still going on, even though stocks have rallied a little bit. So I add up all these various levels of edge and I go, okay, this is time to sell some calls here. So this is where I'm going to get in here. I'm going to capture this extra $8,700. So it's going to be a grand total for probably about 3.5 to almost 4 months of work, $17,100. And this is how you go about assessing the various levels of risk, the various levels of edge that you're seeing out there. Do not sell covered calls. I ran hundreds of millions in covered calls for years and years and years, and I revolutionized the way they were done in the company that I went into. I said, what are you guys doing? You're constantly doing the same thing. You're selling 100% calls on everything all the time. I said, you're going to get destroyed in a bull market. You are not getting the edge. Now, I have another video that you can watch up here or here that is going to talk a little bit about that edge in covered calls versus put selling. So I hope you guys enjoyed that. And we'll just keep going in this series and let's see how this income program goes on our crypto. We'll talk to you soon.